And I kind of want to start there because there is a lot coming at anyone who's running a big company like yours today, whether it's out of Washington, whether it's out of how the consumer is feeling. How would you describe the cruise business and how it compares from your last quarterly update? What has changed at all? Because I know you have been very optimistic, and it seems like you're still optimistic about the business based on the releases.
Yeah, absolutely. So the thing that's changed from December to today is, well, we just completed our first quarter, and instead of yields being up 4.7%, which is what we guided to, they were up 7.3%. And so clearly things went very, very well in the first quarter. Consumers love to cruise, and we've got 8 brands that are purposely tied to particular demographics, particular national markets, and it serves us very, very well. And so what we see is enough strength in that first quarter that we can raise our yields for the year, for our full year guidance. And that's basically saying that we're content to keep 4% plus yields for the remaining 3 quarters of the year, despite the fact that there is, geopolitical and macroeconomic uncertainty, which certainly wasn't on the radar when we came up with our guidance to begin with in December.
And yet investors seem to be at least initially disappointed over your second quarter EBITDA forecast. Your forecast was $1.32 billion in the second quarter. Analysts had expected $1.35 billion. Should they be disappointed?
You know what? I guess I'll answer by saying our December guidance was basically saying we were going to be about was it $1.70, give or take, for the year on EPS. We just came out with guidance that said $1.83. Mm-hmm. We outperformed on revenue yields. Onboard trends are really, really healthy with our consumers. So I would argue that we should be higher than where we were in December, since our results are better than where we were in December. But that's really up to the street. Our job is to deliver and hopefully over-deliver, which is what we did in the first quarter.
So Josh, let's talk a little bit more about that consumer, because in the press release, you noted that Carnival is not completely immune from heightened macroeconomic and geopolitical volatility, and you're still taking up earnings expectations for the year. You remain on track to have another stellar year across the entire brand of cruises. Why are we hearing then from airlines that consumers are pulling back? Why are we not seeing that in your business?
Well, I think there's a couple of things to differentiate. First of all, airlines aren't just for holidays. Airlines are business travel. It is holidays, it's conferences, it's government travel. We are really holidays. We are vacations. So we're in a different bucket than where airlines are. We came into 2025 the best book position we've ever been in at higher prices. We came out at the end of the first quarter still being in line with record occupancy percentage and prices still nicely higher. We're 80% booked for the year. And so we have relatively limited inventory to sell when it comes to 2025. At the same time, our guests and our brands aren't just focused on in-year. We just came out of the first quarter of the wave period, which is considered the traditional big push for selling. And we set a record for the most volume we've ever done during wave for future years out. So people aren't just thinking about the short term, they're thinking about the long term, which is exactly what we're doing as a company.
But are you noticing any change in the tone of the bookings, the pace of the bookings, or perhaps even people canceling because of their own uncertainty? I understand there's this difference between discretionary spend and business spend, but after all, discretionary is discretionary, and that's often the first thing to go if people are feeling uncertain.
Yeah, we haven't seen any noticeable change in trends on cancellations. Certainly, as we mentioned on the call, there were ups and downs over the first quarter. There's ups and downs all the time. But we got through our period exactly at pretty much the highest point that you can get at least for us in our history. And we feel good about the position that puts us in. Like I said, onboard spending, was up about 10% year over year in the first quarter. That's an acceleration of year-over-year performance versus where we were in the fourth quarter. And at least into the first couple of weeks of March with cruises that have ended, we really haven't seen a slowdown in that consumer behavior, that onboard spending. And so, at the end of the day, people in good times and bad times, they take holiday, they take a break, they need a break. You could argue in bad times, they need that break even more than they do in the good times. And that's what cruising is. It's a break. It's a way to relax, to get away from things, enjoy time with friends and family. That's what people pay for now. And when you line up cruise versus other vacation alternatives, frustrating as it is for me as a CEO of a cruise company, we're a great value. And the fact is, if people are getting concerned, if there's uncertainty, if there's noise in the background, people are searching for more value for their money, and that's exactly what we do. So it plays very well into our strength.
So just for the record, I could go on a cruise for about a month right now because I need a break. But
We'd love to have you. We'd love to have you.
Having said that, what about in terms of pricing? Are you guys able to maintain pricing? Nothing changing in that regard, either for the first quarter or even for the outlook for the second quarter?
Yeah, so like I said, the first quarter, our yields year over year were up over 7%, and over a 2-year period, we're talking about 24% higher yields for the first quarter. When we look at the rest of the year, Q2 through 4, we're projecting a little bit over 4% yield improvement year over year for that 9-month period remainder of the year. So, look, it's hard going, right? It's not like anything is easy, and we got to work hard. Our brands work hard to make that become a reality, and they do it through good revenue management techniques, through the great advertising that they're doing, and then ultimately delivering onboard experiences that people want to pay for. And then they get off of our ships, and they tell their friends and family how amazing it is, and we get more.
Hey, one of the things we wanted to ask you is something that in late February, the U.S. Commerce Secretary Howard Lutnick, he made some comments about how U.S.-based cruise companies, Josh, should be paying taxes even on ships that are registered abroad. We saw your stock, along with everybody in the major cruise space, sell off on his words, even though analysts indicated the worry may be overblown. They said, we've heard this before over the years. Is it overblown? Are you talking with the Trump administration about this? And if there was a U.S. registration change, what would that mean for you guys?
So clearly, we're operating in the confines of U.S. law as well we should. International shipping is based on very specific tax regimes that are set up in the U.S. and all over the world. And effectively, it's based on reciprocity. So we feel like we're in a good place. We're doing what we should be doing. Having said that, anything out of the administration, including Secretary Lutnick, we certainly take seriously, and we're working hard to understand what the concerns are and how we can address them, if any. There's really nothing to report on from my perspective as far as what that means or where things could be going. But we'll stay on our guard and do whatever we need to do to make sure we're staying on the right side of policy.
Josh, why don't you register in the U.S.? Is it regulatory reasons? Is it tax reasons? Is it labor reasons? Is it all of the above? Why don't you register in the U.S.?
Yeah, it's just not that simple. You don't just take a ship and all of a sudden you can't just switch to U.S. registry. It's just not that simple. And really, it's a people go to school for classes for this, right? About international shipping and what it means, how it works, and it's been in place for much longer than I've been alive. And so, we could do a separate session on that, but suffice it to say, it's a regime that is well founded, and it's where we are right now.
All right. So it's not something that we should think about. I mean, it can be done though, right?
What is the it?
In terms of registering in the United States?
It's honestly not that simple based on how U.S. law works. It's just not that simple.
Okay. Would that be a conversation, though, then to have with the Trump administration, Josh, and say, listen, guys, if it was simpler, I mean, they're all about making things simpler, right? Efficient. Is there a conversation to be had?
Oh, we're happy to talk to the administration, truly.
Okay. Hey, listen, one of the things we wanted to talk to you about in a big way, and I've seen it firsthand, is the island destinations that you guys have. And it seems to be a continued, move for you guys in expansion. You opened Celebration Key this July. This is in Grand Bahama Island. How do these island destinations, we've talked to you about it, but it continues to be something we find really interesting. How does it fit into the North American cruise strategy and how important it is, I always think about, to the top line and the profitability picture?
Yeah, so for us, what we're doing with Celebration Key, which opens in July, it's a bit of a first for us. Even though we have a wonderful footprint around the Caribbean, we've built and created these destinations really as a service to our brands and something that's supportive of and really supplemental to what brands are doing and leading with the cruise experience that makes them so loved. What we're doing with Celebration Key, which doesn't even exist yet, and yet it's captivated the audience and captivated the imagination of Carnival cruisers and others, is we want to also lead with destination as a driver of consideration, of a driver for people saying, I need to go on Carnival Cruise Line because I'll get to go to Celebration Key, or because I'll get to go to Relax Away Half Moon Key, because it's the only way to get there. And so we believe that there's a tremendous amount of untapped value there in revenue generation, as well as the fact that these destinations are built close to the United States, hence we consume less fuel in order to get there, which saves money, is obviously good for the planet.
Hey, listen, 20 seconds left here. What is your most popular destination? Where do most people want to go? And what kind of trip?
Well, we carry 13 million people last year. They want to go to a lot of places. I'd say if you were going to ask me what's my top that I've ever been to, I got to say you got to go on a cruise to Alaska. And you got to go with Princess, Holland America, or Carnival, because they do it in an amazing way. And Cunard for those who are looking for the luxury end. But if you want to see the great state, the only way to do it is with a great brand that can take you on both sea and with our land experiences, because we've got hotels and motor coaches and glass dome rail cars and you name it, we got it up in Alaska.